Hello, everybody. Thank you for joining us today for this session on navigating CARES Act funding programs. We're going to talk about the PPP, some provider relief funding programs. And with me, so my name is Daniel Mayo. I am a principal at Withum, Smith & Brown. I'm also the National Lead for Federal Tax Policy. And with me today is Domenic Segalla, who's a market leader in the healthcare advisory practice. We're also happy to have Kimberly Kempton-Serra with us today, who is a member of Garfunkel Wild. And she'll be moderating the session with us today. So we'll get started here with the, we're going to start with the PPP loan forgiveness process. And I thought I'd give a very quick overview of sort of where we are, some statistics for the program, which I thought might be helpful. We know the CARES Act was signed by the president on March 27th, and it authorized $350 billion for the PPP. Applications opened on April 3rd, and then money quickly ran out, if everybody recalls, by April 16th. At that point, about 1.6 million loans had been issued. On April 24th, new legislation was enacted again, which authorized additional funding. And then on June 5th, the PPP Flexibility Act was signed. And this was a key act that really brought in that 24-week covered period. And this really ensures that almost everyone should get full forgiveness on the PPP loan. It lowered the 75-25 rule to a 60-40 rule, brought in some new safe harbors, many favorable things. So that Flexibility Act was real boon for the PPP. On July 4th, they extended the deadline to apply for PPP loans, but that is now closed. They're no longer issuing new PPP loans. So the program is closed for new loans. Now it's all about forgiveness. That's what we're dealing with today, is how to apply for and what are the rules that are going to apply for the loan forgiveness process. In terms of statistics, there are about 5.2 million loans were issued by the SBA. And I linked there to a report. So anytime you see an underlined item in this presentation, it's a link. So you can click that and it'll take you through to the SBA's report, which is very helpful because it provides a lot of detail on the number of loans, how many loans are issued per state, by industry. They really do break it down and cut the data in a variety of ways, so it's very useful. Well, what I point out here is 87% of the loans are under 150,000 and 95% are under 350,000. As of August 10th, the SBA started accepting applications, although even today, as we sit here, not every lender has their portal open. So there are even some large national lenders have not finalized or opened their PPP loan forgiveness application portal. So we've heard many clients of ours have already applied for and received forgiveness on their PPP loan. Others are not able to apply because of their lender has not opened its portal. So hopefully that all lenders get online very soon so borrowers can complete the application. As of today, there's 3 applications that are out there. We have the long form, which is the default one, the 3508. If borrowers cannot use either the EZ or the simplified form, they then default into the main form, which is the long form 3508. It requires a completion of the Schedule A worksheet, which has the FTE or the headcount reductions, the FTE calculation, and also the wage reduction calculations. The EZ form is probably what most people are going to be using who have had their business significantly impacted by the pandemic. Borrowers need to certify
Dan, I have a question. From an accounting perspective, what do you recommend that borrowers using the simple form and selecting the FTE Safe Harbor 1 regarding the disruption in business, what do you recommend that they maintain documentation-wise to support using that safe harbor?
Yeah, so there's 3 safe harbors to get in. One of them, as you mentioned, talks about the borrower's business has not returned to pre-February 15th levels. And there, I think it's the shutdown orders are going to be helpful. So documenting the state shutdown orders that applied to their business, how they could not, open, like take the restaurants, for example. They were shutdown orders. Then when they opened, they had 25 or 50% capacity limits. So I think it's a matter of documenting the restrictions that applied, the revenue reductions that applied. And that's going to be helpful, I think, because there is a long tail to the audits of these PPP loans. Borrowers are required to maintain their documentation for 6 years after they receive a loan forgiveness decision. So the SBA really has a long tail here, long period of time to come back and audit these loans. So you're right, keeping that documentation is going to be very important. So we recommend that people establish and document these things today, because 5 or 6 years from now, they may not remember the details of this program and why they made the decisions they did. So the EZ form, again, if you meet one of those 3 things, it's a great way. It's there's no FTE and wage reduction calculations to be done. It's a 1-page simplified form. Even though it's an EZ form, we have a lot of clients with large loans who qualify. So we have many clients with $2, $3, $4 million loans who are using the EZ form. The key here is, though, you meet one of those 3 certifications on the document in order to be able to use the form. And finally, we have the 3508S, the simplified form. This is for loans of $50,000 or less. Somewhat new form. It came in last month. The nice thing about this form is the SBA said that headcount and salary reductions simply do not apply. They granted a complete wholesale exemption from these rules, and they said that if your loan's under $50,000, you can fill out an application with no numbers on it. Just make a series of representations that you've essentially complied with the program, and you'll receive full forgiveness of the loan. This affects about 3.5 million of the 5.2 million loans that were issued. But you can see there it's not a large dollar amount. It's 62 billion of, slightly over 10% of the total dollar amount of loans issued. I do want to point out here that all these forms require the submission of supporting documentation, even that simple form. And finally, the many borrowers, we find that most of our clients, I think every single one so far, has received full forgiveness. If someone's not receiving full forgiveness, we urge them to reach out to a qualified advisor, because most people should be, and either there's a mistake or there's some kind of drastic headcount or wage reductions that's causing there not to be full forgiveness. That's the only case where someone should not get full forgiveness, is where they have massive headcount or wage reductions. On the order of something more than 50%. It'd have to be a large reduction or wage reduction as well. So many borrowers are relying solely on the payroll costs because they find they don't need the rent and the overhead expenses in order to qualify for full forgiveness. In terms of the process, when the borrower submits its application to the lender has 60 days to render a decision to the SBA. The SBA then has 90 days to render a decision back to the lender. The lender then notifies the borrower. So that's the mechanics of it. Borrower goes to lender, lender to SBA, SBA back to lender, lender to borrower. The SBA has made the rules somewhat simpler in recent days, recent weeks, by saying that the lender only needs to confirm the amount of spending up to the loan forgiveness amount. So if you have $1 million loan and the borrower submits $1,500,000 of expenses because they spent more than the loan amount, the lender only needs to confirm the first $1 million of spending. And once they do that, they can approve the application, send it off to the SBA. So they're trying to simplify the process to make it quicker and easier for banks. In terms of the decision, the SBA can either approve the loan forgiveness in whole or in part, deny it, or deny it without prejudice and say they need more information. The repayment obligation, a lot of times we get the question, is there an end date? Is there a date that borrowers have to apply by and to get forgiveness? What's the latest date a borrower can apply? And similarly also, can I apply early? The early is pretty much over with at this point, since most borrowers' covered period has ended by this point. But in terms of the last date you can possibly apply, that's really a function of the repayment obligation. And so there is no end date, but the repayment obligation sets an outer date. And the way that works is this: after the loan is no payments are due on the loan until 10 months after the end of the covered period. And so if the borrower does not apply for forgiveness within 10 months after the end of its covered period, the lender will start setting repayment terms. And so effectively, that's when the borrower has to get its application. If the borrower submits its application 1 day before the end of that 10-month covered period, that will extend the the loan deferment date, so no payments will be due until the borrower gets a decision. Having said that, most borrowers are applying early. The psychology of this is they want it done. They want to know they have full forgiveness. So as I said, many of our clients have already applied. Many are in the process of applying. Most people seem to want to get this done as soon as possible, get it over with while the information's fresh, and they have access to all the documents. And then we're telling them to store the data. everything you've put it in a file and hold on to it, because there's a long tail to that audit period, as I mentioned. A lot of borrowers are relying on payroll provider reports that they receive from their PEO or payroll provider like ADP, for example. We're seeing that a lot of these reports have many inaccuracies in them, and it's not always a function of the company making a mistake. They don't have full data, and so that can be a problem with some of these reports. So people need to realize they cannot just rely wholesale on the reports they get from their payroll provider. And so I listed two of the common errors we see here. One is on the FTE calculation, the full-time equivalent calculation. A lot of times the payroll provider knows when an employee works because they have payroll reports for those weeks, but they don't necessarily have the information when the employee did not work. And so the FTE calculation is a weekly average over the full term of the covered period. So that's some of the examples of one of those cases where we see the reports are inaccurate. Another one deals with earnings codes and what's properly included in payroll. And so when some employers have a lot of earnings codes, they have overtime, regular time, they sometimes fail to include all of the appropriate codes or include some codes that should not be there. So one example here is the overtime code, which is part of payroll expense. We know that payroll includes regular pay, overtime pay, bonus pay, hazard pay, severance pay. So it's a very broad definition of payroll. Sometimes they fail to include some of these codes because there's so many of them. Other times they include codes like mileage reimbursement, which is not necessarily a payroll code. So you really need to look at the payroll provider reports with a careful eye to make sure that it's accurately including the right information. So now we're going to turn to these large loans, this 2 million plus crowd, and this has received a lot of attention lately. Ever since the the SBA came out with that FAQ 31, that famous frequently asked question 31, that deals with whether the borrower had a good faith basis as of the loan application date to represent that the current economic conditions made the loan necessary to support its ongoing operations. The SBA stated that every loan of 2 million or more will be reviewed as part of the loan forgiveness process for two things. One, for loan eligibility, whether the borrower was entitled to the loan based on that representation, and two, whether they're entitled to loan forgiveness, as all applications will be considered. So that's why we expect these large loans to take longer to be reviewed by the lender and, more importantly, by the SBA. And in the instances we've heard to date about loans being approved, they've been the under 2 million loans. I haven't heard yet of a loan being approved for more than 2 million. Doesn't mean it hasn't happened. We just haven't heard of it here at Withum. Loans under 2 million do not have to worry about this representation. After much back and forth with Treasury, the SBA came out with this FAQ 46. Again, there's a link there to it, so you can look at all the FAQs and look at 46, where they said loans under 2 million are deemed to have made this required certification in good faith. So they take the issue off the table for those loans under 2 million. It's the 2 million or more that they have to deal with. The SBA inquiring, was the loan necessary? Did you really need it, or did you have enough money on hand to support your business? What happened most recently at the end of October, two forms began circulating, although nothing officially has been posted on the Treasury or SBA websites, which is kind of strange. Usually everything has appeared on the website, but these two forms, 3509 deals with for-profit businesses, and the 3510 deals with nonprofit borrowers. And this is the SBA's attempt to gather information on the borrowers, so only for the loans of 2 million or more, in order to make the assessment of whether current economic conditions made the loan necessary to support its ongoing business operations. The forms are about 5 or 6 pages. They require a lot of information, some of which goes beyond the scope of this representation. And so there's a lot of critical analysis out there, critical statements about these forms. We know that some major lobbying organizations like the AICPA are lobbying to have them pulled and or modified. And so let's talk about some of the things about these forms, what they ask for, and why the borrowers really need to look at these forms hard. If you have the loan, the SBA has said that there are about 42,000 borrowers in the for-profit forms of the 3509, and there's about 10,000 nonprofits in the over 2 million range. So it affects about 52,000 borrowers will have to contend with this form. There's a quick turnaround on it, so we're telling people to get the form, start filling it out now. So when you do get it, and you'll have that 10-day period to respond, You'll be prepared. You'll have time to show it, share it within the company, make sure senior management can review it, sign off on it, provide comments. So if you have it prepared today, that will help you when you do get the form. And again, even though it's not been published officially, we have clients who've received the form for their lender and have asked them to fill it out. We also heard instances of clients being told by their lender not to fill it out, that they think it's a draft form, that it may change. So really getting conflicting information, but if you do receive the form from your lender, you will have to fill it out. So what does it ask for?
So Dan, I just have a quick question about that. Given that there's no certainty about these forms, earlier you were saying that borrowers want to get forgiveness as quickly as possible and get it out of the way. But for borrowers with loans of over 2 million, do you recommend that they hold off for a bit till so there's some certainty about the 2 questionnaires?
So that's a good question. It's hard to answer. So what I can say is this: they're going to have to fill out the form in any event. So I don't think delaying is going to provide a material benefit. It may, in the sense that if this form goes away, it's not likely to. Maybe it'll be modified. On the other hand, I think this form does have an impact on people when they apply, because this may cause some borrowers to choose to use an 8-week covered period instead of a 24-week covered period. And so normally we've been agnostic. We tell people it doesn't matter whether you use 8 or 24. The goal is to get full forgiveness. And if you can do it in 8, great. If you didn't spend enough in 8 weeks, use a 24-week covered period, and that will give you full forgiveness. This form, though, given the information it asks for, information after March 13th to the end of its covered period, we'll talk about these questions now. We'll see why using an 8-week covered period may be beneficial for some borrowers. So let's look at the 2 assessments it makes. 1 is business activity and 2 is liquidity. Let's start with business activity. The form wants to compare, the form seeks to compare gross revenue of second quarter of 2020 versus 2019. Was the borrower affected by a shutdown order? Has it altered its operations? And here's a question here: did the borrower begin any capital improvements between March 13th and the end of its covered period? Well, this is technically irrelevant, because the representation that was made as of the loan application date, and the borrower didn't necessarily know what it was going to do after that date. But I think what they're trying to do here is gain a full picture of the borrower and all borrowers, so they can decide which cases to pursue, some of the more egregious cases. And then there's a catch-all request here for other information. But this question here, the second to last one, they're capital improvements. If a borrower did begin a capital improvement in week 10 of its covered period, right, on a 24-week covered period, it may be beneficial to use an 8-week covered period so they can answer this question no. There's been some questions about whether these forms move the goalposts, whether this is another instance of the SBA changing the rules midstream. It's not clear. We don't know how they're going to use this form. My own personal view, and this is pure speculation, is that the form is not intended to change the rules, because it's an information request. It's not a interim final rule published by the SBA. There's been no formal announcement of the form, but it's probably not a rule change. It's probably the SBA fishing for information, trying to get a full sense of the borrower's activity so they can decide who to go after and who to pursue with greater vigor. On the liquidity assessment side of it, the questions are even more intrusive. So they do ask for cash and cash equivalents on hand at the end of March. Right? They want to know if that borrower had enough liquidity here to support its operations and didn't really need the loan. So they asked, did the borrower pay any dividends or distributions between March 13th and the end of the covered period? So, right, to the extent there are large dividends or distributions, let's say there was $1 million loan and they made a $2 million distribution. To the extent you can cut your covered period, shorten it to 8 weeks instead of 24, you can answer this question no. If you made a large distribution in week 10 or week 12, maybe you choose an 8-week covered period. Did the borrower prepay any outstanding debt, meaning before it was contractually due? And then did the borrower pay any employees or owners more than $250,000 a year on an annualized basis? So you can see what they're getting at here. They want to know, did the borrower have enough cash to do these other activities that would suggest the loan was unnecessary? Was the borrower a public company? They talk about the ownership, who owned the company. They want to know if private equity owned it, a hedge fund, did a government organization own it? Did the borrower receive any other CARES Act funds other than the PPP? And finally, this catch-all request. And So one of the important things about this form we're telling borrowers is this catch-all request for both business activity and liquidity assessment is this is the borrower's opportunity to put its best foot forward. And this is where borrowers really need to craft a response, make sure their first impression of the loan reviewer at the SBA is one where they highlight the uncertainty as of the loan application date, even if they have some of these bad facts like they made a large dividend distribution or they prepaid their outstanding debt or began a capital improvement campaign during its covered period. This is these catch-all requests where the borrower has an opportunity to craft an answer and to frame the issues in the way most favorable to them. Again, the form will have a 10-day response date, so we're advising people to consider doing them now. We talked about the AICPA and others who are submitting comments about the forms, saying that it's inappropriate, asking for information beyond the scope of the representation. And the last thing we'll mention here is on November 5th, I should say, the U.S. District Court in Washington, D.C. Decided a summary judgment motion for some 5 news organizations that filed Freedom of Information Act requests with the SBA to get the loan amounts of the borrowers. And the court said that in a 40-page opinion, which is linked here, if you click that memorandum opinion, it will take you to the court's opinion. The SBA is obligated to disclose the names and exact loan amounts for all borrowers under the PPP and EIDL. And so this is a significant data point because the SBA resisted providing this information previously, saying that it was confidential information. The court rejected that. The court said that they went through a couple pages of why they did not believe it was confidential. And then also the court said that in addition, borrowers on the application signed a standard disclaimer acknowledging that the SBA was going to disclose this information under Freedom of Information Act requests. And that sort of statement was on both the applications for the PPP and the EIDL. So unless the SBA appeals this decision successfully, it will be disclosing the names and exact loan amounts of every borrower, all 5.2 million borrowers. So in terms of the economic, we'll talk briefly about the EIDL loans. These were loans that are issued simultaneously with PPP, except their issue applied directly to the SBA, not to a private lender with these loans. And they were intended to help entities stay afloat during this disaster period. These are not forgivable loans like the PPP. And they're not short term. Like the PPP is a 2-year loan, can be extended to 5. This is a 30-year loan with up to a $2 million maximum loan amount. You see it has a 3.75% interest rate. Payments are deferred for a year, but interest still accrues. The key fact about this loan is it's not forgivable, other than the advance, which we'll talk about at the bottom of the slide here. The use of the proceeds can only be used for working capital and normal operating expenses. So they don't want these loans used for distributions, capital campaigns, expanding the business. That's really what they're trying to prevent. So it has to be used for payroll, accounts payable, continuation, healthcare, rent, utilities, that kind of thing. Collateral was required for these loans, unlike the PPP, as everybody knows. And finally, there was a grant portion. When a borrower applied within 3 days, they were supposed to get a grant of up to $10,000. It was based on the number of employees, and then it capped out at $10,000. And this grant would be approved even if the loan was not ultimately approved. So this grant would be taxable to people. So it's $10,000, but it's subject to federal income tax. That does not require it to be repaid. And if the borrower got this, it will automatically be deducted from loan forgiveness under the PPP loan forgiveness program. So let's say a borrower had $1 million loan. It did receive an EIDL grant. When the borrower completes its application on the PPP, it will ask for full forgiveness, 100% of that $1 million loan amount. But when they receive, and let's say the SBA grants full forgiveness, what they're actually going to grant is forgiveness of $990,000. Because they got that grant, the SBA will automatically reduce the loan forgiveness amount by the amount of that EIDL advance, which is the grant portion. So that $10,000, if a borrower received it on an EIDL loan, will automatically be deducted from the loan forgiveness amount. In that case, the borrower will have to repay that $10,000 plus interest to the lender. On the tax issues, we get a lot of questions about the tax issues. There's no tax consequences on receipt of a PPP loan. Generally, when speaking, when debt is canceled, the borrower does have income, but the CARES Act excludes it in this case. So we know that the loans are tax-free, forgiveness rather is tax-free. However, the CARES Act did not address the expenses. And this is where the IRS came in and issued notice 2020-32. And that notice disallows expenses relating to loan forgiveness on a PPP loan. By now, most people are familiar with this. This is what effectively makes the loan taxable to borrowers because they lose their expenses. They cannot deduct them as they otherwise would have been able to. Unfortunately, the IRS did not address timing. They didn't directly address it. The authorities cited in the notice make it pretty clear, at least the IRS's view, that expense disallowance occurs in 2020, not 2021, even if a loan forgiveness decision is not received until 2021. I also believe that their view is that you would not get, the expense disallowance occurs in 2020, even if the borrower waits until 2021 to apply for loan forgiveness. So either case, the expense disallowance should occur in 2020 is the IRS's view. I've spoken to the IRS, two different people, one of whom was the author of this notice. That is their view, that the deductions are disallowed as long as there's a reasonable expectation of forgiveness and you can quantify that amount. And the disallowance occurs in 2020, not 2021, even if the forgiveness is not received until 2021. This is a big point.
I have a question about that. So what if forgiveness isn't obtained by the tax filing deadline for 2020? Do you recommend borrowers get an extension, or should they take the deductions and then have to amend their return if they get forgiveness? Or what do you think the safest course is?
Yeah, well, so if a taxpayer wants to follow the IRS notice, they should disallow the deductions regardless of the filing deadline, regardless of whether they have a decision, regardless of whether they applied yet. That's the IRS's view. There are people out there talking about a tax benefit rule and whether that applies. My own personal view is that does not apply. It's based on a case, a bank case, but issued by the Supreme Court many years ago. But that's not the analysis that was provided by the IRS. So if one wants to follow the notice, and most people generally take the IRS advice, not everyone, of course, but the IRS view is 2021 it occurs. We have heard, it's been reported publicly that the IRS stated they were going to issue guidance on this issue on the timing. So it's going to be, the IRS has said it will be out by the end of the year, possibly by the end of November. So we expect more guidance to come on this point. It really almost has to. I mean, this affects 5.2 million borrowers, and they're unclear. And you have a lot of different statements out there by advisors on when expense disallowance occurs. Some are saying 2020, like me. Others are saying you can choose to disallow it in 2020 or 2021. Others are saying it's only in 2021 if that's when you get your forgiveness decision. It's not. The IRS really should step in and clarify this so you don't have this divergence of opinions on an issue that affects so many taxpayers. Are changes coming? So that's a good question, and we've been getting this a lot because the stimulus discussions have failed for so long, right? Speaker Pelosi and Secretary Mnuchin have been negotiating back and forth. While that's happened, the Senate passes a skinny version of stimulus, and so the parties keep getting further apart. Whether a deal is finally happens is anyone's guess. It may happen during the lame duck session. It may not happen until after the new administration comes in. But the two things on the table are, one is loan forgiveness proposal would make it tax-free, so they would reverse that position of IRS expense disallowance. They would reverse it legislatively. The second is there's there would be a second round of the PPP, and this is a question we get a lot. This would be a narrower, more tailored version of a PPP. It would apply to companies with 200 or less employees versus 500 in the first round. The borrowers must have suffered a 25% reduction in gross revenue in the first 3 quarters of 2020 versus the same quarter of 2019, which is, again, that was not a requirement in the first PPP. It would still be based on 250% of the average monthly payroll, right, so 2.5 months, but the loan size would be capped at 2 million instead of 10 million. There are other limitations here, but some cases make it broader for earmarking money for very small businesses and expanding the permitted uses of the funds. But whether these things come in is anyone's guess. I would say it's likely there's going to be another stimulus round of legislation. Whether it includes these things is anyone's guess. It'll probably include another PPP. Whether it includes the loan forgiveness, making it tax-free, I can't really, I don't have a great handicapping on that one. So with that, I will turn it over to Domenic to talk about provider relief funds and other CARES Act updates.
Thanks, Dan.
Thank you.
Thank you, Dan. And my name is Domenic Segalla. I lead the healthcare advisory practice at Withum, Smith & Brown. And we're going to take the next 20 to 25 minutes to talk about provider relief funds, and specifically two pieces of that under CARES Act. There'll be the provider relief funds and the advanced accelerated Medicare payments. And just to note, there's a lot of changes going on in this. Daily, there's new information coming out. So we're sharing with you today with what we know as of today as HHS continues to give more guidance on this. So again, our goals, we're going to talk about the CARES Act and the two specific pieces of that, the Medicare Accelerated Advance Payment Program, the provider relief funds, and the post-payment notice, which is very important because what we're going to focus on in the provider relief funds is the reporting. And the reporting is what's causing a lot of concern and uncertainty because there's so many gray areas. So this is just a definition of the CARES Act. Clearly it was put in place to give institutions, providers in specific, dollars to continue their operation and dollars to help prevent, prepare for, and continue to treat COVID-19 patients. Two things that we talked about, and we'll talk about more, again, under the CARES Act was the Provider Relief Fund. And in addition to that was the existing accelerated payment program through Medicare. And this has always been in place. What they did was they expanded this to give up to 6 months of your Medicare revenue as a loan, different from the provider relief funds, which is treated as a grant, assuming you can apply for it, and we'll talk about that. So Medicare Accelerated Advance Payment Program, I talked about this. I think the important thing here is $100 billion was issued. This program did halt on April 26th. The importance here is there still is discussion from HHS, from the American Hospital Association, from many provider lobbying groups to turn these into grants. Again, right now, these are a loan. And really the biggest thing on this page is, fortunately, on October 1st, the Continuing Appropriations Act took place. Prior to this, all providers who received a loan from Medicare were to pay this back within 6 months, which would have been around August. What this took into place now and said, you don't have to pay it back for the first 12 months, and we're going to give you more time to pay it back. And really what this next page goes through, many people will hear 29 months is the number they have back. So let me just walk through what that means. You had 12 months of no payment from the date you received these dollars. Again, it's a loan. The next 11 months, Medicare will recoup 25% of those funds. Again, assuming you haven't paid any of those back. If at the end of that 11 months, you still owe money, the next 6 months, they will recoup 50%. Again, they're not trying to take it all back at once. Your 12 months of no payment plus your 11 plus your 6 is the 29 months that people are hearing about. Important thing to note, at the end of 29 months, if you still have dollars owed back, you will receive a letter from CMS saying the monies are due with a 4% interest rate. Now that interest does not start from when you receive the money, so non-compounding. It starts from that end of 29 months. So let's say after that 29-month period, you pay this back in 30 days, it's only 4% interest for 30 days. So now let's talk about the provider relief funds under the CARES Act. $175 billion was put out there. This chart just walks through the different tranches of money that were released over different periods of time. This started back in March. You can see at the bottom that our calculation is there was about 145 million appropriated or released out of the 175 billion, I should say, and there's still 30 billion out there. The highlighted 20 billion in yellow, I just want to touch on briefly. That was the last tranche of $20 billion at HHS. The data had to be submitted as of Friday, last Friday, November 6th. And the methodology for this is somewhat unknown. What they tried to do was get every provider at least 2% of their net patient service revenue. Whatever's left out of that, of the 20 billion, would then be reallocated. The one thing we do know is the goal of HHS is to release these funds before the end of the year. And that's all the information we have right now. So in terms of the Provider Relief Fund, and this is important, again, it's used to prevent, prepare, and respond to coronavirus, and she'll reimburse the recipients only for healthcare expenses and lost revenue attributable to that. The second one is very interesting. So we had many clients that believed they could not apply for or receive Provider Relief Funds because they didn't treat COVID-19 patients. The regs actually say, and within the guidelines of HHS, it says with possible or actual cases, and any patient at some point can become infected, unfortunately, with COVID-19, and that's a clarification. The last point on the bottom is you cannot double dip, and what they mean by that is if you received other sources of funding during the pandemic, could be PPP as Dan spoke about, it could be FEMA dollars, you cannot use those dollars. If you've applied expenses against those, you cannot use those same expenses to apply for the Provider Relief Funds. And we'll get into a little more detail on that. Again, this is just a definition from HHS to talk about, again, prepare, respond for coronavirus. And the second paragraph here, the last bullet point, I think is so important because the objective of the Provider Relief Funds was to give the providers additional cash flow to be able to expand their capacity for the care of the COVID-19 patients. And as we see some of these clarifications coming through from HHS, it somewhat goes against what the whole objective was. So this is important, and we're going to talk about this a little bit more, but from a definition standpoint, they did come out with a post-payment notice on October 22nd and said lost revenue is now defined as your change in net patient revenue for calendar year 2020 versus calendar year 2019. And we're going to talk about that more because there's been 3 definitions of lost revenue. This is the final one. The takeaway I want you to remember from this is it has to be calendar year. You cannot pick and choose certain months to compare year over year. What this slide is going to show is these are the reporting deadlines. February 15th of 2021 is the reporting deadline for all provider relief dollars received. This is important because clearly it's coming up quick. We strongly recommend to reach out to your advisors, to your auditors, accountants, to have them assist you with this because literally it's right around the corner. HHS had said their portal will be open January 15th, 21, so a month before to allow you to start filling in the data. The other piece of
Domenic,
this that
I have a question about that. So being that the guidance has continued to change, have you been telling your clients to keep their provider relief funds in a separate bank account altogether, or somehow segregate it in order to properly trace what they're spending the funds on?
Yeah, great question. So yes, we do recommend to segregate those funds in a separate account. As important or more importantly is the tracking of those expenses. It has to be audit proof. So if you could set up separate payroll codes, separate cost centers, you need to be able to have supporting documentation. Listen, when the government releases $140 billion, you know they're going to come back and do audits. So we strongly recommend that. So that's a great question. The second bullet point here is, which came out in a post-payment notice October 22nd, and this is important. If you cannot spend or support all of those provider relief funds, and again, the goal is to show expenses and lost revenue up to the amount of the provider relief funds, then they are termed grants. If you cannot do that, CMS or HHS will come in and recoup those funds. What they said now is if you have remaining dollars left that you don't have lost revenues or expenses to apply against, then you have 6 more months to carry that balance forward. So let's say you received $1 million, 500,000 of it you can apply to expenses that weren't reimbursed from anyone else. $200,000 of lost revenue, which is your change in calendar year revenue of 20 versus 19. Now you have $300,000 left. You can now carry these funds forward for the first 6 months of 2021, but you have to use the same comparable period as compared to 2019. So if you're using lost revenue, it's 2021 first 6 months versus 2019 same 6 months. So they need consistency. And again, for any of these carryover funds, the reporting deadline is July 31st. So, and this is important too, and this came out again in October with more clarification. The first step is you have to apply your dollars to expenses attributable to coronavirus. The expense is first, and we'll go into more detail under general and administrative and healthcare related. So anyone who received less than 500,000 of provider relief funds can use the general and administrative, much less detailed. Those that received greater than 500,000 have to use general and administrative and healthcare related expenses. After that, once you've utilized those expense amounts and you can apply any remaining provider relief funds, you need to apply those unused funds to lost revenue. We'll define lost revenue. So this is important. This is a definition of the general and administrative expenses. You have your mortgage and rent, your insurance, your personnel, fringe benefits. Personnel, there is a cap up to $197,000. If someone's salary is greater than that, you can only cap it at $197,000. Utilities and other general and administrative. And HHS has come out with some clarity around this. Says if there are other costs, then you can come up with a methodology that you can support to allocate those costs. And that's important. So it doesn't have to be direct. The other issue that's come about is for mortgage payment or for lease payments. What the FAQs or frequently asked questions have stated is you can only pick up the expense portion of that payment. You cannot pick up the principal portion or the cash payment, the principal portion or cash payment of either a debt service payment or a lease payment. So that cannot be applied to your expenses. And that was some confusion because when they first issued this back in June, you were allowed to do that. So the next slide, now this is more detailed. So this is around the detailed from a supply standpoint, an equipment standpoint, IT, facilities. The big issue here that's come out recently is equipment. We have a client, 2 clients who purchased a piece of equipment for the laboratory to process the COVID-19 testing, $1 million piece of equipment. HHS has now come out and said you cannot use the full cost of that $1 million to apply to your expense. You now can only utilize the annual depreciation amount. So if this piece of equipment had a 5-year depreciation or 5-year useful life, 1/5 is 20%. You can only utilize 20% or $200,000 for that. I go back to what was the objective of these dollars, and this to me does not equate to the objective. Now these hospital systems, smaller systems, ambulatory surgery centers who bought equipment just for COVID-19, now they're stuck with the additional cost, and we're hoping that HHS comes out with some further clarification on this. So here's a great example that came out, and it's very rare that HHS would release an example. And I think this example is important for 2 things. One, it shows that they allow for a methodology of allocating. And 2, it talks about being reimbursed reimbursed by other sources. So in this scenario, PPP supplies, $1,000 were purchased in 2019. In 2020, 4,000 was purchased. So $3,000 of expenses over and above normal operations attributable to coronavirus. Now they say of that 3,000, 2,500 was attributable to coronavirus. So they used a methodology to come up with allocating a portion of that 3,000 that's attributable, and then they say $1,000 was reimbursed from another source, be it FEMA, be it EIDL, be it PPP. So in this instance, this actual example they give, $1,500 of unreimbursed healthcare-related expenses are attributable to coronavirus and can be utilized in your provider relief fund calculation. And this is right in the frequently asked questions. If you click on the site right there, it'll take you to it. So again, I started this by saying there is a lot of confusion. Every day they're coming out with further clarification, and these are just a few of the topics. So how to deal with one-time expenses. We have a client who actually purchased another facility. We have some clients who no longer or dropped service lines. A lot of questions and clarity still needed on that. I talked about the capital issue. You can now only use the annual depreciation, which again to us does not make a lot of sense. The mortgage piece, can you use the principal amount? As of right now, you cannot. And again, more guidance comes out on a daily basis for this. So I spoke a lot about lost revenue. This is critical. August 17th, they came out and said, you know what, come up with a methodology that works for you, flexible. Use your 2020 budget versus your 2020 actual. Makes a lot of sense. You budget your resources along with what you think your volume is going to be. Pandemic hits, volume drops, revenue drops, makes sense. September 19th just created complete confusion. They wanted to define lost revenue as net income from patient service revenue. The final ruling is lost revenue is your change in net patient service revenue of your calendar year 2020 versus calendar year 2019. And I stated that in the past. The importance here is they are also saying that in your 2020 net patient service revenue, you need to include those other sources that you received because of the pandemic. So be it FEMA, be it PPP, that needs to be included in that calculation. And very confusing because from an accounting auditing standpoint, that's not how you define other revenue. Again, reach out to your advisors, reach out to your auditors. Clearly, if your 2020 amount is higher than your 2019, that gap of what you can apply to provider relief funds is not going to be advantageous. Again, this just talks about the lost revenue. It talks about their methodology and it gives some of their non-GAAP definitions. Again, HHS doesn't speak in GAAP, FASB accounting terms, and that's what causes some of the confusion. And I think the last slide is important, and this is clarification. We tell our clients all the time, the reporting entity that received the funds. So it has to follow the TIN or the tax identification number or their provider number from a healthcare standpoint. And then we just wanted to end it with, from a reporting of expenditures, again, these are the due dates, anything received through December 31st, 2020, it's due February 15th, 2021. If you were not able to utilize all of those funds and you're carrying forward a balance, you do have 6 months, but that due date is July 31st, 2021. And that summarizes our discussion on provider relief. Thank you.
Thanks, Dominic, and thanks to Dan as well.
Have a great day.